In this video, I'm going to give you guys the exact framework and structure when it comes to trading and mastering the silver bullet. And towards the end of this video, I'm going to give you guys not only the daily bias, but also we're going to be talking about risk management, entries, and overall psychology. So you not only learned from this video, but you can implement, backtest, and hopefully make your first $10,000 trading. If I could do it, anyone watching this video could do the same, and it does not have to take long. But before we begin, make sure you guys click that like button, subscribe if you're new. I'm your new mentor, Arkhamtrades. Now, let's get into the video. The silver bullet is a time-based model where every day during a period of specific hours, this model will form, especially on the index markets like the S&P, NASDAQ, and Dow Jones. But there's a lot of misconception when it comes to identifying and utilizing the silver bullet, so I'm going to break it down here into 4 parts. And the first rule of thumb that we want to pay attention to is time, and this model is during these hours between 3 sessions: the London session, the New York session, and the London close. The London can range between 3 to 4 a.m. EST, New York 10 to 11 a.m. EST, and the London close is between 2 to 3 p.m. EST. So we have the London session, the New York session, and then the London close. When you're trading the silver bullet, it has to be in alignment with these specific session times. It cannot be outside of it. Before we can place a trade with a silver bullet, we have to pay attention to underlying context. And context is basically creating a narrative and looking for clues inside the markets by focusing on what is the current structure as well as where is liquidity currently lying. When it comes to identifying liquidity pools, these are the key levels that you want to pay attention to: equal highs and lows, prior session highs and lows, prior daily highs and lows, and prior weekly highs and lows. So we can see we took out these equal lows here, then we took out these prior session highs here, as well as we do have these equal highs right here in the form of this high, and then this high right here. These are our equal highs. Price comes higher, takes them out, and then eventually comes back higher to take out those daily highs, and then eventually during the London close taking out those prior weekly highs. So these are our underlying draw on liquidity. And overall structure, we can see that we have been in an uptrend. We've had this original breaker structure after taking out these equal lows, as well as we had this breaker structure as well after price took out this prior low. The underlying structure inside the marketplace is higher prices. So the overall context coming into the market during the New York session is I want to be overall bullish, reaching back above these equal highs or back above these prior daily highs. After we've identified our bias and where the marketplace wants to go, we want to utilize the fair value gaps from either the 5 minutes all the way down to the 1 minute time frame to frame our perfect entry. So we can see that our underlying bias was higher prices following this breaker structure to the upside, as well as we did have these equal highs up here. Price came lower into this bullish fair value gap right here. The fair value gap can be before the silver bullet timing, but you have to take the trade during the silver bullet. You want to be aware of overall order flow, and order flow is primarily shifted to where is price going next, as well as what is the current structure. The current structure is higher prices, and price right now is going higher because we have underlying liquidity above us. So the order flow of the markets is higher prices, so price is going to respect more so bullish fair value gaps rather than bearish fair value gaps. And if we did have a bearish fair value gap, most likely price would then inverse that fair value gap to then go back higher. Price comes into this fair value gap, finds support to reach back higher prices, taking out not only these equal highs right here, but also continuing higher, taking out these prior daily highs. And then during the London close, as you can see, we tapped into this fair value gap right here. During that 2 to 3 o'clock hour, price came down into it, found support, reaching back up into those prior weekly highs to end the day off. Unfortunately, during the London session, we didn't really get a setup, which is completely fine. And the last thing that we want to focus on is overall psychology. And how you prioritize your psychology is by focusing on a rule-based system for success, taking 1 to 2 trades a day, aiming for at least a 2 to 1 R, and using lower risk to build your account long term. So obviously taking 1 to 2 trades a day during your specific kill zone, this builds a system in place to where you don't be in the position to where you're over trading, because you're just following your systems, you're following your rules, as well as you're using less risk to build your accounts over time. So this prevents you from being in a position to where you may over leverage or maybe revenge trade because you lost a lot of money. Most times when I see traders revenge trading, it's because they lost an absorbent amount of money that they weren't comfortable losing. If you lost $5 or if you lost $50, would you be mad or upset compared to if you lost $500 or $1,000? Obviously, you would be more upset if you lost a greater amount of money rather than a lower amount. So it's very important that you use less risk to where you're comfortable losing, so you can build that system over time. As your equity curve increases, that's when you can up your risk over time. You don't want to immediately just jump into it trying to over leverage your way to it, because that is not proper trading. We want to focus on the long term. And if you guys want access to the PDF, I will be putting it inside of the PDF section inside of this free Discord, as well as inside this free Discord, we do have a free course between me and my brother Spec Trades, as well as we do give daily live analysis and trade breakdowns. As well as if you do want to become a VIP student, we do offer daily live trading, daily trade recaps, studies, analysis, as well as trading models, and 24/7 support by not only me, but also my brother Spec Trades. So if you guys want access to the free course, free PDF, or if you want live trade with me and my brother every single morning, that's going to be the first link in the description to join the completely free Spark Trading community. So we're looking at our first example here on NAS 100. I'm on the 15 minutes time frame, and the first thing I want to take note of is obviously understanding where is my underlying market structure and where is my overall draw on liquidity. So we can see that market structure at the moment is bearish, and you may be wondering, how did I know that market structure was bearish, right? What were the key signatures that I was looking for? Well, the first thing that really caught my eye was seeing how we broke back below this fair value gap right here. So as we can see, we had this massive imbalance to the upside, and as we can see, price came back lower, breaking back below this fair value gap low, right? The fair value gap is a 3 candlestick formation. This is the first candlestick, which is referred to as an IPA. Then we have this imbalance push higher, and then we had this third candlestick right here. Once price breaks back below this IPA low, right, which is the first fair value gap of the candlestick formation, right? Once price breaks back below that IPA, this is my indication that price, okay, is now bearish. So seeing how price broke below this fair value gap, this is a strong indication that we're possibly in bearish order flow, as well as we can see that price had already taken out a level of liquidity to the upside. So after taking out that level of liquidity, price struggled to continue back higher. As you can see, price is struggling, had this internal break of structure by this massive displacement to the downside, and price came back into this bearish fair value gap to find resistance to reach back lower. So these are just some of the key signatures that I'm looking for. Is price respecting bullish or bearish levels of support and resistance? Obviously, we respected this bearish fair value gap, and we broke back below this bullish fair value gap. So what is this telling us? Price is willing to respect these bearish levels, but willing to disrespect the bullish levels. So the underlying order flow of the markets is reaching back below lower prices. Now that I understand the overall structure and order flow of the markets, what I want to identify now is liquidity. So all of this movement right here was the London session, and we created these London session lows. And as you can see, price failed to take out these London session lows, meaning not only do we have these London session lows, but we do also have this low right here. So we have both equal lows plus a London session low. Just like that, in about 2 to 3 minutes, we've identified our overall structure. We've identified the overall order flow of where we anticipate the marketplace to go next. And now we've identified our last component, which is this liquidity pool as our draw on liquidity. Now what I want to do is I want to mark out my time zones. So we have 10 o'clock here, which starts in the next 15 minutes here, as well as we have this 11 o'clock hour just right here. So we've marked out our 10 to 11 o'clock hour, which is the New York session. And during this time window, I want to look for a break of structure to the downside, creating a bearish fair value gap to come back up into during that 10 to 11 o'clock hour. Frame my entry reaching back below lower prices into these liquidity pools. keeping things very, very simple. We've created our daily bias by focusing on simply just structure and where is liquidity, and now we're going to frame our entry during these specific time zones. What I'm going to do now as the 10 a.m. is about to open is I'm going to go down to a 5 minutes time frame, and I'm going to look for either a 5-minute, 4-minute, 3-minute, 2-minute, or 1-minute fair value gap to then frame my entry, reaching down into these prior session lows. A 5 minutes time frame here, and we can already identify just before the 10 o'clock is about to open up, we can identify this bearish fair value gap right here on the 5 minutes. You guys may be asking me, well, doesn't price break above this bearish fair value gap here? Isn't this invalid? Well, no, because the overall context, like we mentioned, is lower prices, as well as a fair value gap is not invalidated until price takes out the IPA. And if you guys remember what I talked about with the IPA, it's the first candle in the 3 candlestick formation creating that fair value gap. So since this is a bearish fair value gap, we had this first candle up here, then we had this second candle creating the fair value gap, then the third candle. So in this bearish fair value gap here, this first candle right here would then be our IPA. As long as price does not break above this IPA level, this would then validate as a solid bearish fair value gap, as well as the overall context of the marketplace is lower prices. We have already seen price come back into that 15-minute bearish fair value gap right here, as well as we've tapped into it right here as well. Price had came back up into it once and then twice following this breaker structure to the downside, meaning this old high right here as well as this high right here then become strong highs inside the markets, because this was a high point that tapped into a level of inefficiency, and then we saw a break away from that inefficiency. So we can trust that once the marketplace comes back higher, price is not going to want to break back above these original highs. Instead, price should then be bearish, targeting back below bearish levels of liquidity, which is the sell side liquidity pool. As the 10 a.m. opens up here, I want to frame my short entry inside of this fair value gap level, put my stop loss back above this IPA here, back below these prior session lows here for at least a 2-to-1 R. When you're taking your initial entry, you want to make sure you have a wide enough stop loss to take into account that fair value gap. And as I get additional signatures, let's say price comes higher and then we see that internal break, I can then adjust my stop loss back to this original high. So the first trade that I ever take is going to have a wider stop loss, and then as I get additional signatures and additional information, I can then readjust my stop loss, giving me a better risk to reward. Let's see how this plays out. See, price comes lower, takes out these previous session lows. And then as we take out these previous session lows, we see this break back to the upside, taking out this previous high right here. Essentially, just like we mentioned, as long as price does not take out this original high here, which was this IPA high, this would then still valid as a bearish level of resistance. As you can see, price does not take out that same high. Instead, we take out this original internal high. So as we get this liquidity sweep of this internal high, I can adjust my stop loss back above now this high, reaching back below lower prices. If you're ever in a trade scenario, like we mentioned, right, price came into this fair value gap, saw this initial push lower, and then it came back higher to take out this previous high, and then we saw this break. As price breaks back above this previous high, this was simply just a liquidity sweep, but you always want to have your stop loss at the original fair value gap. Our original stop loss was at this IPA fair value gap right here. This was our original stop loss. So as long as price was at this level, we respected it, meaning from this fair value gap high to this fair value gap low right here, anything inside of this range is internal levels of liquidity. So once price came back higher to take out this internal high, I was more than confident to adjust my stop loss back above now this high here, reaching back below lower prices. How you would improve using the silver bullet is just by backtesting every single day, seeing the 10 to 11 o'clock hour, seeing where price went, going from the 5 minutes to 1 minute, looking for that fair value gap, and continuously using that repetition and improving over time. Obviously, it's not going to be overnight, but as long as you continue to show up, continue to stick to the same model, and continue to improve upon it, you will see consistency. So that's going to be it for the video. I hope you guys got a lot of value from this video, but if you guys want live trade with me and my brother every single morning, plus 100+ hours worth of trade breakdowns, lessons, and much more, that's going to be the first in the description. And if you can't afford the VIP, we do have a completely free course and a completely free community, which you can still join. That's going to be the first in the description to join the Spark Trading community. But before you leave, make sure you guys click that like, subscribe if you haven't, and comment what you guys want to see next. I'm your new mentor, Arkhamtrades. Be safe.